Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of December 30th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week we did see Maryland mortgage rates drift higher, especially after the Feds announced that they're going to start tapering the asset program in January. So mortgage rates did drift higher. If you look at the bond chart on the screen, you can see that the long-term trend for mortgage bonds for them to sell off and move lower, that's the big red arrow down. But we did hammer out a level of support right there at 102.49, and mortgage bonds were able to bounce higher off of that on Friday. So very short term, we're looking for maybe the bonds to keep moving slightly higher, move interest rates slightly lower. So we are going to recommend floating your Maryland mortgage rate to start the week to see if we can build on Friday's bounce. If, however, mortgage bonds turn lower and break below that level of support, we would quickly switch to a locking stance because they got a long way to go, and that's the trend is for bonds to move lower, rates to move higher. Now, if we dig into the economic news, last week we saw that the stock market set the 50th record high this year. S&P index moved all the way up to 1,842.02 on Thursday. So that's the 50th record high this year. Unbelievable stock market. The market's just been rallying big time. And it's basically because of an improving economy, an improving housing market, and the Federal Reserve just pumping money in the economy through the QE3 asset purchase program. So great news for the stock market. Check out your 401k. You'll probably be happy. Then we saw on Thursday the weekly initial jobless claims was released, and that came out better than expected by 42,000 claims. It dropped to 338,000 claims from a high of 380,000 last week. So the claims are all over the place. That's basically because of the holiday hiring and firing season. So once we get through that in January, we should be able to get a good number on the read on initial jobless claims. In the housing news, there's a new director of the FHFA, Federal Housing and Finance Administration, which is Mel Watts, former congressman, was finally approved. And the first thing he did was he said he's going to delay the implementation of the increase of the fee on conventional mortgages. Fannie and Freddie was going to effect March 2014, and that would have, not only rates moving up, that would have popped rates higher as soon as they instituted the fee. Because the way they institute the fee is they increase the mortgage rate for the consumers to pay the fee. So he's put a hold on that, so there's no fee increase called the G fee for March 2014. And then we also saw a report come out of the Federal Housing Finance Agency, the FHFA, which released its house price index for 2013, and it was slightly better than expected. It came out at 8.2% year-over-year increase in the house price index, and it was up 0.5% for the month. Then we also saw a report from the Mortgage Bankers Association, the MBA. They released their summary of the FHA 2013 report. And it's for the Mortgage Insurance Fund, which showed that it was improving. The net worth improved by $15 billion over last year's estimates. So it rose from a negative $16.3 billion. Now it's negative. Now it's only negative $1.3 billion. So that's great news. Next year it should be positive. Now the capital reserve ratio went from negative 1.44% in 2012 to negative 0.11% in 2013. Another great news. It will return positive in 2014, and it'll hit the mandatory 2% reserve by 2015. So great news on FHA. Program has definitely turned around. Increasing the premiums helped that. So we're not looking for FHA to be in trouble next year or look for any bailout. They should return positive on all fronts. And then we saw in the housing news the new home sales for November 2013 came out. Now, they reported down 2.1% from October, but they actually revised October higher to 474,000 homes sold. Now, that's the best number since July 2008. So, which means this month's still very strong at 464,000 sales. Even though it's down 2.1%, it's down from like the best reading since 2008. So, still great news for new construction. Home builders are still very optimistic about 2014. Also in the report, there was a measure of home supply. Number of homes for sale, it's only at 4.3 months supply. So that's a very tight inventory. So for home buyers out there, if you can't find a house, it's because we got a tight inventory. If you find one you like, you better jump on it and negotiate hard. And then we got the median home price. The national average came out at $270,900. That's up 10.6% year over year. Now, in the local news, the next free first-time homebuyer seminar is Saturday, January 25th. That's in Towson, Maryland at the Baltimore Sheraton North Hotel on Delaney Road. And you can register for that event by giving us a call in the office at 410-412-3319, or you can register online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.